Okay, welcome everyone. So today we'll be looking at what I call the great disconnect. The reason for that title is that usually when there is like trade uh, tension, we're talking about the trade tension that is going on between United States of America and China. But as in from time to time, uh, Trump will come out with a milder, no, using a milder tone when it comes to China. So things in the market will improve again. And on Thursday too, there was a news about two banks that they are actually issued with like what they call a bad loan. So people, as in the market, was sold off on Thursday. But the expectation was that probably, as in those two banks, too, probably, as in people were concerned about like the fundamental of other bank. That is, if the issue with the two bank will spread to other banks. But on Friday, when there was, I mean, there's some other bank that reported their third quarter earning, they did well. So then there was no reason for as in there was no reason for people to think that the effect of the two banks was spread to other banks. So that's why the market picked back up on Friday. So on Thursday, there was a sold off as the market went down. The bet on Friday, when some other bank reported, then that cleared the thought of probably the effect of the two bank will be spreading to other banks. So that's the trade tension and the regional bank. So now we look at valuation and risk. When I talk about valuation, we're talking about how, as in how high the market has gone. So last time I type in SPY. So from April during the Liberation Day, that is when Trump announced the tariff, the market sold off about around minus 18. That's a minus 18% from the high here all the way down there. Then things started getting, I mean, back to normal. Now we've gone from minus 18 all the way back to positive 17 around there. So that's like 33% move from April till now. So usually when things run like a 20% difference, people will start like expecting another correction. Correction is when the market like retreat from wherever position it is by 10%. So meaning if the markets like drop down from wherever it is about 10%, we call it correction. If it's less than 10%, it's just a pullback. And if it's about 20%, it's called crash. So I think at this valuation now, most people or some people will start talking about the market will crash soon. But when it comes to the stock market, there is no certainty. There is no certainty. They could go based on history of what has happened. History, sometimes we say history does not repeat itself in the market, but it rhymes. the meaning of that is that it is sorry. The meaning of that is that it's not every time that the same thing that happened, let's say 2 years, that is not certain that the same thing will repeat itself, but we could learn from what has happened in history. So that's the reason the analysis of people that are talking about the stock market, some will start expecting uh, a correction or a crash. But there is no certainty that no one in particular will get it right all of the time. So sometimes they may just be lucky to call, like call correction or crash and it happens. So we could not necessarily, or we can't certainly say that this person will be right all of the time. So we just do our best to stay defensive. So the reason people are fearful or expecting a crash soon or correction is because the market has run from negative 18 all the way to like 17 here. So we're in bull market for now. That is, the market it has run from its low more than 20%. So based on that, my own take is as in for now, I'm staying I'm staying defensive. Defensive meaning I'm not gonna be excited about growth stock, like buying every dip. Like every time there is a pullback on the growth stock. When I say growth stock, I'm referring to like Google, Tesla, Facebook, like the Max 7. But the only exception that I have is Amazon. So to me, I'm likely to buy Amazon. But other than Amazon, um, I'm only buying dividend paying company for now until there's another catalyst or there's another reason to do otherwise. So for now, staying defensive for me is buying company that pay dividend. So if things goes down, at least I will still get paid dividend while I'm waiting for the market to come back, as in for the market to start picking up again. So that's my own defensive measure. Some other people have what they call hedging, like buying option, I mean put option. But I'm not really much into buying put as a defensive. So for me, I just stay with company that are paying dividend. But I'm on the Mag 7. I'm still I'm still comfortable buying Amazon. So I don't know if we have any other question or if we have any question, John.
I just have a quick question, sir. Why Amazon though? Out of the
Yeah,
list.
that's out of the Mag 7. So this is where Amazon is. All right. So Amazon, the last time they reported, uh, okay, the last time they reported in May, he jumped all the way. I mean, he jumped. Now, the last time they reported in August, it went down. That's just because the expectation of the cloud That's like where they make money apart from selling and buying from Amazon. That's they provided cloud storage for other companies. Their expectation, they didn't really meet the expectation of the either the market, then it dropped. So based on where it is now, this is 200, this is the 200 moving average. So based on this, I'm thinking that when they report by the end of probably this month, let me check. Look like October 29. So my expectation is that when they report this time around, October 30, after market close. So my expectation is most of the time, that's like I said, there is no certainty, but usually when a good company has been trading down this way, most of the time they are, as in during the earning, they will retrace they will retrace back up most of the time. So that's the reason that is at this time it look like it's likely to start picking up from here. And there are good news about them. That is most analysis they are expecting that they are expecting good thing about them. One said 300, another said 240 to 275, and the third one says 280. So after they reported in August, so from that August, most of the analysis are expecting that that the performance will begin to pick up. So I put that into consideration. Then I also consider that they've been trading down since the last earning, and there is nothing fundamentally wrong with them. So my expectation is that they will pick up either from tomorrow or when they report. So that's my own reason for that. Among the seven complaint that we call Magnificent Seven. So for me, I'm comfortable buying Amazon by tomorrow. All right, so that's my own take on the Mag 7 Magnificent 7. That is for now. The only one that I'm going to buy more of will be Amazon. Then other than that, I will only buy dividend paying company. So I said we should stay defensive and watch the future unfold. So for certain, we don't have certainty when it comes to the market, but we could just glean from past history, and then as in you just make your choice from there. So but that's for me. I will buy more of Amazon and also dividend paying for now. Any other thought or question?
Well, I just have a quick question. I know it's kind of uh, probably different in terms of this question here. Amazon has the same characteristics as Nvidia in terms of they coming down. Nvidia has come down a little bit also, if we can go to the
Okay.
chart. But you
Okay.
seem still not to be comfortable with Nvidia. Is there because they have the same company in time to come down a little bit down? It's to come down a little bit. How low would you be comfortable to pick up Nvidia? If it comes to what point wouldn't I change your thesis and say that I think this is
Yeah. So for Amazon is on 200-day moving average, but this Nvidia is still on 50-day. Okay, so many Amazon have moved down to this 200 days, and usually what I do is So in this case, this one hasn't moved down enough for me. That's for me. As in this is it's on its 50 day, so it's likely to pick up from this 50 day and keep going back to the 20 days. So the difference between 183 and the highest it has been is like 190. So it's only like 5% or less. But for Amazon, the difference is about 19%. So there's a there's a room for Amazon to move back up than this one. So that's my own reason for that. I think this one is like only 5% here, but Amazon. Okay. The highest was 240, but now it's 213. So when you subtract 240 from 213, so we have about no more than 10% difference. So the movement from 213 to 240 is a lot. So my hope is that very soon it's gonna be moving back to 230 to 40. So the difference there is a lot. That's the reason for that. This one is on 200 days moving average, and Nvidia has only traded down to its 50-day moving average. Yeah, any other thought?
Let's look at Microsoft.
Okay. All right. MSF. All right, so all right, what's your take on Microsoft?
That's fine.
Oh,
That's
as in
fine. I
what's
thought
your
it
thought?
was no, no. I thought it was on the 200. That's fine. That's fine.
Okay. Yeah, so among all the Mag 7, it's only Amazon that is like on its 200 moving average. So all of these guys, they are still trading, I mean, they are still touching their 50 day. So based on that, as there is like a more opportunity, I mean, like more opportunity to make money on Amazon than others. Okay. That doesn't mean I will 100%, but that's just my own reason that I will go with Amazon than all of that one for now. All right, any thoughts? So, I mean, for the benefit of those that are just joining us, we're looking at the situation in the market. That is the trade tension between US and China, where we say usually Trump, I mean, it will be like tough when he speaks, then probably the second day or something, he will find I mean, an easier way of addressing the situation. So we call that one tackle, that is Trump is always chicken out. So, but what we're saying, what is likely to play out is like US and China will find a way to resolve their issue as they will find a way to resolve their issue without crashing the economy. So that's what we expect to happen between China and the US. That is, they will find a way to no to be friendly with each other. And on Thursday, there was an issue with two banks. So the market sold off. I mean, like there was a sell-off. The expectation was that the effect of the bank will extend to other banks, but on Friday, after some other bank reported their earnings, people were encouraged that the effect of the bad loan from the bank wouldn't extend to other banks. So I think that's on regional bank. And the place we are now, we're talking about valuation, that is looking at the S&P, that the market has moved from negative 18 all the way to positive 17. So that's a difference of 33%. So usually when the market move about 20% different, then people will start expecting either correction or a pullback or a crash. So my own take on where we are now is for us to stay defensive. And I said to stay defensive is I'm only buying company that pay dividend. That if the market goes down, I'm still gonna be getting paid until the market recovers again. So that's my own defensive measure. And we said some people do buy put, like an option on whatever company they have. So let's say you buy Amazon, you're going long. Long meaning you expect that it's gonna keep going up. But to protect your investment, you could buy put. But I don't do that. My own way of protecting myself is buying. As in, at this point, it's moving most of my money into company that pay dividend. So that's what I'm doing for now. So I don't know if any of us are like you are in the market buying for now. So as in what are you buying, or what are you, as in what's your thought about the market for now? Anybody? As in what are you buying now, or what are you doing in the market now? What's your expectation for the future? Future could be between now and December. Do you have any take? Brother, so what are you, as in what's your move for from now? I mean, like your plan for now till December, or probably not to November.
Like you've been doing also, I've been closing some of my positions in tech, and I've been looking for defensive I think consumer product. Those
Oh,
are the things
defense. Okay.
yes, yes, those are the ones that I kind of been buying a little bit at a time. And one of the companies that actually I strongly believe that two of them I think that they're about to go up, which is Bristol Myers and also GIS. I think those are the
Mm,
companies that I believe they are they're up. That's at least that's what I've been buying.
okay. You say
GIS and Bristol Myers.
G
IS.
I S.
Yes.
Oh, okay.
Yes.
General means. Okay. And based on the shot, yeah, it may be a good buy. So based on the shot, they might start going up. But the question will be, why do they trade down? Do you know?
Um, I I think it was my justification. Let's look at my justification for this. I think I did a chart on based on the let me see what I let me go back and see GIS now. Let's see here my justification here. From my charts, from the technical standpoint, I think that
Okay.
a uh, it's an opportunity. I think it's an opportunity. That's one. It's an opportunity to buy low at this point. I
Okay.
wasn't really. I did not, based on the numbers, based on the the income level, and based on the point where the chart is at, 52-week low. I kind of figure that they are it's a low enough to buy. It's a low
That
enough.
could be true, but I'm just as a, if I look at the chart, no, it's trading down.
Correct. Yes.
So it's look no, the law of physics as an object will continue in its direction until an external force or act on it. So as in if I will look for the reason, as in why, so if the chart is saying it's trading down, it might likely start going up. But I will be interested in the reason why it traded down before I jumped in. So I will leave it at that. That is, if you're just going with the chart, but if I look at the chart like this, I want to find out what happened from this place. I don't know if anybody else has a comment or a take. Um,
Uh, how you doing, sir?
okay. Nice to
Yes,
have
sir.
you, bro, Colapo.
Yeah, it's been a long time.
Yeah, no problem. We're glad to have you back.
Yes, sir. I've not been able to join your training all this while because I was in school.
Oh, okay.
So yeah. So recently I was looking at the market,
Okay.
and there's some of these professional that I'm following.
Okay.
So yeah, I think so I'm looking at Rigetti so
Oh, okay.
far, and Applied Digital. So those are the three stocks that I'm looking at. But right now, I'm just holding like a small position in Rigetti, but I think it's
Okay.
already overvalued to me. I think it's already overvalued. So, but
Okay.
I think before, so my plan is that next week, after everything that Trump did this last week. I believe this. I'm hoping that this coming week is gonna be a little bit better. It might be like time to actually go into the market again because everything just went down, right?
Before Thursday last week, we did. Yeah.
Yeah. So everything went down this last week. Everything like drastically went down, and so I'm hoping like my Monday tomorrow is gonna be like a time to pick back up. That's that's just that's just I'm not like I'm not saying that it's gonna be 100% sure, but it's market, you can do anything. So but one thing I'm thinking is that before December, before the third week of December,
Okay.
the market should be like should be up there before
Okay.
before third week of because everybody will be coming back to the market to people want to make money for Christmas and New Year. So I my instinct is kind of saying that the market, like second week of December, the market should be so if you want to take that data advantages, I think is the best time now to do whatever you want to do. Like me, that's what I want to do. So this coming week, I will, look at the China and US trade war. If if kind of being resolved, then I will just hold my position. Maybe I'm not gonna be going too hard. I'm just gonna maybe hold my full position, whatever I want to do, and leave it there the second week of December. But second week of December, I'll be getting out of the market. Like I've I already told myself this. I'm gonna liquidate all my things. I'm getting out of the market because this thing it happened 2024, 2025. Market is trend, right? It's trend. So anything it happened in 2024, it happened in 2025. The market was up there like second week of December, and everybody was like, for me, I was like, oh, it's gonna keep going up, but no. Everyone will do Christmas, they want to do New Year, they're gonna start pulling out of the market. And so that's just for me. I've said it to myself that second week getting out
Okay.
of the market.
Then so
So
you
the
plan
best
to
time,
come back again? As in you
uh
plan to come back as
maybe
in like next year or something?
yeah, maybe by next year, March, April.
Okay.
Yeah, I'm planning to come back around that time. Because if you remember, the great the great trade war was in April, right? April this
Yes.
year.
Mm-hmm.
So I think that thing is gonna repeat itself again next year. That
Okay. We'll see.
yeah, because this our boss. I don't want to, we are in public. I don't want to. Is they are playing games. They know what they are doing. They are
Okay.
playing game with the market, so they know what they are doing.
Uh,
Most of the big ballers, they are following them. They want to know whatever it says, whatever I do, they want to know. So whatever it's doing, that's what everybody is doing. So, but for we
uh,
that we just have few dollars. So if we are not smart enough, we'll be paying them. So there's no
okay.
point for me. That's how I see it. There's no point leaving my even if it's $2,000 that I have. There's no point living in the market to pay one to pay someone that already have like $100 million.
Thank you for your take. So I'm just trying to, I was typing rejected. So when it was still $11 for
Mm,
$11 here, that's when I started looking at it. But I didn't buy it because usually when it comes to, as in this company, they are not making money yet. I
mm,
think, okay, like here, income is negative. So the company is not making money yet. So it just the hernia is negative. So it's sentiment that is moving it
mm,
for now. So in that case, when it start going down, within few days, we can have it down here. So this is different from Amazon, Facebook. Those companies, they are established, they are making money already. But this one is just future expectation of people. So this one is just based on sentiment. So if you are lucky to get in while it was here, and this may be a good time to get out, but this not a good time to join to join them. Nah. All right,
mm.
just want to point out that this company, they are not making money yet. We are just projecting what the future, what the okay. Mhm. What the future is likely to be for them. That's the move. So this kind of company, if I'm gonna buy them, not here, As I started looking when it was 11, I've only put like few dollars into it. So if it goes up, that's okay. But at this point, so 2021, 2020, these are the kind of company that I will buy. But I guess I've learned my lesson from those years. So I don't jump on all of these companies. If I'm going to do, it will be wise stay here, and that will be with few, as in just few dollars. So for now, I stay with the established company, and I will look for when there is a bad news about the company. So two things move the market: sentiment and fundamental. So the fundamental is what we could see here. As in, this is the fundamental, that is how much money they are making. How, that's what I'm like fundamental. But the sentiment is what people think about their future. Then, like this one, just sentiment that is moving it. They are not making money yet. All right, so that I just want to point that out, that this, if one, if your strategy is just buying this kind of company only, most of the time, one will lose out most of the time. But for me, I stay with the established company, but I wait. But the way I determine when to enter is when there is a bad news. So I have those established company on my watch list. I'm not buying them, I just put them on my watch list. Then I'll be waiting when there is a news that bring down the sentiment about them. So for example, Google in June, they sued them for monopoly of Chrome. That's the search engine. So Google is an established company. They have good fundamental. So it went down from 180 to like 160. So I jumped in. So that's the kind of strategy that I use. Established company, I'll be waiting for whenever there's going to be a bad news that changes sentiment about them. Then I'll buy, then waiting for when the issue will be resolved. So it was resolved in August, September, meaning when the judge ruled that they don't have to divest Chrome. Then within few days, he jumped from like 190 all the way to 233. But I sold at 233, but now it's now 250, like 251, 252. So that's the strategy that I use. I have established company in my watch list. Then I'll be waiting for when there will be like negative sentiment about them that I think or that I'm thinking that it's gonna be resolved soon. So that's my strategy. But it's been working for the past 3 years, so I will stay with it for now. All right, brother. I share some.
Okay.
I don't know if okay. Or somebody else. You wanted to say something?
Yeah, so I want to ask you, so
Okay.
what you mean by established company like Amazon, Microsoft,
Yes.
Alphabet,
Yes.
right?
All the
But do you
Mac
think
said as except Tesla. I don't go with Tesla. Okay, go ahead.
yeah, so I was about to say that, so I think right now Tesla is not a good way to go because Trump and Elon Musk, they kind of having issue, and he doesn't like he's kind of not supporting electric car for now, right?
Yes. So for now, I'm not bullish on Tesla for now.
Yeah, that's what I think too.
Okay. Rasha, son, you do have like what are you doing in the market now?
So,
Or
like I
what are
said,
you planning to do?
so I'm going to be sticking to your strategy, and I think it makes a lot of sense to stick with established companies
Okay.
because definitely if we already know they've been there for years, they've been tried, they've been tested. So
Yes.
having that sentiment, that news, that negative news that makes people act in the opposite direction by dumping their shares, which drops down the price, is a good strategy because we know that
Mm,
people are only reacting based on sentiment, not because anything is wrong with that company. So I think it's a good
mhm.
strategy. Definitely is what I am going to be sticking with as well. I'm going to start putting some well-established companies on my watch list as well. I'll continue to take a look at them and start to take some positions when that time is right. And I see that deep, then I would get in there, take some position, and then just wait and see when the issue is resolved to see how far up uh, the stock will in the opposite direction to go before I can take some profit. So that's my
Mm,
strategy.
okay. All right, that's as in that is how I've been doing it. So, but like going back to the slide, but for now, I say for now, based on what is going on in the market, I will not buy what we call the dip. So if any pullback on the Max 7, I'm not buying them for now. So the same go for Nvidia. So if there's a pullback, like a pullback to 50-day, I won't buy them for now. So the only one that I'm see, I still have Amazon, but I'm still planning to buy more by tomorrow of Amazon. The only reason is that's traded down to is 200 moving average. And the only bad news, it's not really bad news. It's just that the cloud section of the company didn't meet the expectation of of the market or the analysts in the last earning. But usually, no, it's not always, but usually if it goes down the last earning, this time around, it's likely. That's usually I'm thinking if it has traded down, then any good news will be a good news this time. So when the sentiment about a company has already gone down, any good news will move it up. But people are excited about the company before earning. So usually say the bullishness is already has already been priced in. So most of the time that happened to Nvidia, that Nvidia will have traded up before the earning. So after earning, it will just be trading sideways. So many people were expecting that it's gonna be it will do fine. Then the market, the price already moved up. Then most of the time it will just be trading sideways. So that's my expectation for Amazon this time around that when they report or any good news will be good news, as in people will receive it well and it will go back up. So that just because it's touching like the 200 moving average already. So that's my take on the Max 7. But other than that, I I for now. So for now, I'm not getting out of the market. What I did like a month ago is to sell my growth company and then move the money to dividend paying. So if the market go down, when I say the market, like the whole market goes down, at least I will still be earning dividend. And the share that I have, if I have 200 shares or 1,000 share of a company, I will still have the 1,000 when the market start recovering. But the dividend will be, as in I will still be able to live on dividend until the market recovers. So that's how I'm taking it for now. So it's hard to time the market. Time as in like the whole market itself that you get out I'm planning to come back in. You could do that, but it's very hard to like time mm, to time the whole market. Like, no, I'm gonna sell all my stock in December, then come back in April. Some people do that, but I'm just saying that most of the time it's better to like still have it, to still stay in it. But the way I'm staying in it for me, it's moving. So the only growth stock that I have now is Amazon. I have sold Google, uh, Nvidia, and there's another cybersecurity company that I do buy. So I've sold all of those that I categorize as growth. And Robinhood, I've sold all of those. So I moved the money to dividend. So that's my strategy for now. That is, even if the market goes down, I'm still gonna be realizing dividend on the company. Then we'll wait for when the market will recover again. But for me, this is my so do we call it livelihood now? As in, this is how I make a living now. I don't go to work anymore. So, so in my own case, as in I can't get out of the market, I still need to find a way to make money. So as of to October 3 of this year, I'm now my own boss. So all right, so that's my own take. So I move most of my money from gold stock. I move them to company that will pay me dividend. Then I will stay with them until when we have a clear direction of where the whole market will be, then I can start going back to growth stock. So the only exception for now will be Amazon. All right. All right, thank you for your time. So as in that's my own take on the market now. I'm staying defensive. I'm buying dividend paying company. Then we'll see what happens as with the future unfold. But I'm still bullish on Amazon. I don't know if we have any other take on the market or question.
I think UPS is about to take a run up. Ooh!
Oh, I already bought. Oh, okay,
I
no,
think it's yeah. I'm saying I think it's about to take a heat up. I think it's about to go up. So it was a good tip. And just to let you know, because I think it's about to go up now.
okay,
So
and that's the last one that I mentioned. So my reason for it, so I'm still holding them as I said I will hold it till October 28th when they report. Okay. So the chart is already ticking up, but
yeah,
that's not really the reason for it. I bought when it was like 87 here already. But my reason being they've been paying dividend, as in they've been consistent in paying their dividend. They are likely to find a way to keep supporting it because people think they will cut it. But my own take is that they will find a way to support paying dividend, which is a good thing. And when they report next time at the end of October here, we will have a clarification about the tariff. So if that happens, then within 2 days, we're expecting 95 to 100. So that's the reason I bought it like 2 months ago. So any question? But that's the kind of thing that I do when I had like a sentiment change about the company, then I will go to the news here to see what happened.
I have a question, sir. What do you think
Okay,
about the ETF like QQQ VOO?
that's QQQ, right?
Yeah, because like you just said, right? Uh,
Yeah.
for
Yes.
me, I already made up my mind
Okay.
because um, like this thing happened like last year, December, the year before December. So
Okay. Okay.
I just want to maintain my whatever profit I can get, especially in crypto,
Okay.
because they are really using crypto they are leveraging the market. They are using it for rug and pull.
Okay.
I don't know, maybe you understand what I'm saying,
Yeah.
but
Yeah. I know.
I don't want to go
The,
to
that happened last
deep.
week again. That
Yeah,
happened in crypto last week.
yeah. A lot of people, some billionaire, they come with the big money. They leverage the market down. So I don't want to go deep. So
Okay.
I've made up my mind. I'm getting out of that thing due to some personal, you know,
Okay.
thing I've experienced in the market. Yeah, I don't want to go. It's kind of political. I don't want to go into it.
Okay.
So
And that's okay as
I'm thinking, yeah. So two things, maybe hold my liquid cash or go to QQQ, just or VOO, because they are ETF, right? They don't,
yes.
whenever the market is going down, they don't go down like every other individual stock.
Okay. All right. So this is QQQ. Now, my own take is still like from April, it has run to about 18. This is negative 18, and QQQ is about 18% up now. So like different of 36%. So it's still the same thing with the VOO2. All right, so VO2, like minus 18 here, now it's around 17 here. As in VO is still the same thing with SPY that I typed in. So my take here is you could be buying little by little, but I'm not excited about them now. So that's why I'm just staying with company that will pay me dividend for now. So they are ETF, they won't drop like an individual company, but we'll still look at what has happened from April. Either they are ETF or individual, they are already traded up. So one could start stepping in little by little, but I won't advise to like put a lot, no, like jump, no, like like actually jump in. That's my advice. That's my advice. What my advice would be that one could be stepping little by little to them. Okay. All right, so our time is well spent. We have 2 more minutes. So this is still the old market. The what's it called? This the representation of the market, the SPY and VOO. The difference is just the expenses ratio. So this one is better than SPY. This point 003 and the other one is like 0.97. No, but so this one will cost you less than buying SPY. That's the difference. But so this is the representation of the market indices. So I will advise one can start stepping in little by little, but not really like move a lot of money into it until we know, no, like until there is a catalyst or there is a correction, then we can get back in. So lastly, as of this time, what I said to as in people that were talking that time is I wasn't confident about the market at this point, like April, March. The reason being that the market has moved up in 2023, 2024. So in 2025, I was not expecting that the market will keep growing. So as of this point, I sold the growth stock and moved them to dividend paying. But when the liberation day happened in April, that was high. That's like a reason for me to change my mind. So it's from April that I started buying Robinhood or Google again. So that's what I'm saying, that if something happen, like what happened here, then we will have a reason to jump back into either VO or QQQ or any of the growth companies. So the reason that I'm now in the market is April was the reason that when it went down, then I would say move out from dividend to buying growth stock. But as of August, again, I've moved back to my position here. That is being cautious or being defensive as of September and August. All right. So if something happen again between, as we continue to move on in future, then we'll see if there's a need to change. But for now, I would say we should stay defensive and let's see how the future unfold. All right. Now, thank you for coming. So every Sunday by 8 p.m., we'll meet, we'll discuss the general condition of the market, and then we'll look at where the opportunity is for the coming week. Then we'll take question and answer. So that's what we'll be doing for now every Sunday, to look at the general condition. And then if there's a sector, a company that is likely to make money. So for me now, the two companies that I'm expecting is Amazon and UPS. So UPS, will see what happens October 28th, Amazon October 30th. But I hope for good news. All right. Have a blessed one. A blessed
Thank
record.
you. Bye bye.
All right, so have a good night.